Good day, sir. How are you doing? So while I wait for you, I'm just going to do my normal analysis and I'll just narrate a few things. So on gold, this is how I'm viewing gold. I see that we've found support on last week's psychological level, as you can see, which is also, we also have an order block in there. So we found support. We failed to break that level. And price is starting to show that there is potential to expand to the top side. So for now, I would say I'll be looking for anything lining me up with a buy. Looking for price to come around 3360. That's my point of interest. So if I get any sign to buy, then I'm definitely taking that setup for a buy. So just to come to the H1, I think that's where we're gonna wait. So the H1, what am I looking for? I'm basically looking for visibility of a pin bar, which is going to represent a stop hunt or a liquidity sweep. Where do I want to see this? I want to see it form anywhere from the current candle to anywhere up until today's open price. We also have this order block right here. So that's my point of interest. So if we come from here, so by the time we get here, price will be below the 13. That's one thing you should note. So the 13 EMA might move like this, right? So I'll be waiting for price to come back above the 13 or to show me a pin bar, maybe a doji. These are the main candles I want to see around here. So if I get that price action, then I'll definitely jump to M15, look for my confirmation and entry. So for now, just stoking gold on H1 and we'll just leave it like this for now. So should this level get violated, it will mean I need to reassess the setup to see if maybe price wants to do this. So for now, main point of interest is this. If it gets violated, then I'll look to reassess and reanalyze. So stoking on gold. So let's just start on the far left, right? So daily chart, you can see we don't have much volume or momentum on US 30. As you can see, this is the daily chart. This is where this month started, the month of June. Um, so yeah, okay, I see you joining in the session there. Hello,
Hello, good morning, sir.
good day, how are you?
I'm fine. And you?
Good, thanks.
Okay.
All right, without wasting much time, did you get time to watch yesterday's sessions?
Yes, I did.
Do you
I
have any
did. It
questions?
makes a lot of sense. Yes, I did. My question is not majorly what you explained. I understand. It's just that the information of the candlestick, and it's because when we look at the what we just taught yesterday, it was like majorly on a downward trend. How do we enter and the rest on a downward trend? So I want you to, if you can also take an example of an upward trend, then how does the candlestick of an upward trend form? Can you hear me?
Yes, I'm listening.
How does the candlestick of an upward trend form? Just like in you say like if somebody wants to like if you are doing the trading, you are like you are the master of the game and you are the owner of the game, sort of. So you want to like deceive the people that are coming in. So most of the time it is like in a downward trend, starts with a bullish trend after the opening price a little bit before it creates a wick and then start coming down. Then if it is an upward trend, does it do the same? Does it show like a bearish trend, then after which
Yes,
creates a wick
yes,
and
it's the
then
same
shows a
thing.
bullish trend?
So the
Okay,
bullish
it's the same
trend
thing.
is just the opposite of the sell. But let me
Okay.
see if I can show you an example. We're just going to do a quick example. So
Okay.
again, maybe before I get into that explanation, I want to explain something about patterns. The
Okay, sir.
reason we are trading is because we want to identify a pattern. A pattern is simply human behavior. So we want to identify a pattern on the charts. So what pattern are we looking for if we want to buy? And what pattern are we looking for if we want to sell? So what you want to identify, if you are buying, you always want to identify a lower low or a peak formation low, PFL. You always want to identify the lowest low of whatever price action you are looking at. So if you are looking at the 4 hour, you always want to identify where is the lowest low, then check if you've got a trend, right? So you want to always identify a lowest low, which means price to your left either has to be going sideways, then it creates a low, or it was coming down from a downtrend, then it creates a lowest low. Then once that lowest low is created, you want to see a structure get broken. So you want to see a break of market structure, which is a BMS. Once you see a break of market structure, that's a sign that your price is coming up. So now you wait for them to retrace so that you can get a better price point to enter with lower risk and a higher reward. So when you are looking at the retracement, you want to locate the order blocks, which you can see. You want to locate a fair value gap. You can locate one of these. You don't have to locate everything. All you have to do is identify one. You want to locate an order block, a fair value gap, maybe equal lows. You also want to look for any potential rejection on either the 13 EMA or any moving average, which is going to be in the vicinity. Then once you get that, then you get your entry. So in other words, what does a buy pattern look like? A buy pattern looks like this. This part here is what we are looking for. This, if you are looking for a sell pattern, it's the same thing. Prices to show you that it was coming up or going sideways, you have to locate a highest high or a peak or a peak. Then you want price to break a structure first. A break of structure is just a sign that there is more people selling than those who were buying here. So once a structure is broken, it's a sign that price has got potential. Then all we do is wait for a retracement into any of those confluences which I just mentioned. Then we want to take a sell and catch the next big move. So a sell pattern looks like this. This is what we are looking for. So now that we understand what a pattern is, these patterns are visible on any time frame, but we usually prefer to see them on our time frame of entry. Time frame of entry. That's where you want to identify this pattern. This means if your entry chart is the 3 minute, on the 3 minute, you cannot buy until you identify the pattern, right? If your entry time frame is the 5 minute time frame, same thing. You want to see the same pattern on the 5 minute. If your entry time frame is the M15, same thing. You want to see that same pattern on the 15-minute time frame. All right. So now that we've figured out that these patterns, we look for them on the smaller time frames, we now come to our candlestick formation. What does a bullish candle look like? A bullish candle is a candle which closes above the open price. So if this is the open price the candle opens and it starts by pushing down. From the point it opened and went below that open price, that candlestick is bearish, 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 until it sets a low of that candle, whatever time frame it is. So let's say it's a daily candle, right? Once we set a low, it's going to start to come back up. Soon as it starts to push back up, it leaves a wick. That's where the wick starts to get created, created, back to the open price. All right. Okay, let me just check. There's another student who wants to enter this lesson. Let me just
Allow the person to enter.
okay, all right. Okay. All right. So as the price is pushing up, pushing up, pushing up, pushing up, once we get back to the open price, the candlestick will be looking like this. That daily candle will be looking like this. Then from the moment we go above the open price, the candle starts to be green. Right? Green, 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 up until whatever high point it gets to before it starts to retrace. So let's say the highest point it got to was right here. Then it started to retrace a bit and it closed here. So this is our high price. Highest price of that candle. If it's a daily, that means that's the high of the day. Then when it closes right here, that's our closing price. Now, that's how a bullish candle is formed. If this is a daily candle and we are in a bullish momentum and we were anticipating the candle to expand to the top side or to be bullish, what pattern are we looking for on the smaller time frames? From the open price, we are looking to see price push to the downside. This can most likely be on the 15-minute time frame, or H1, it can be visible. H1, M30, M15, M5. Then the first sign of a buy is going to be a break of structure. Remember, our open price is, okay, let me try to, okay, so let's say this is our open price for the day. So sometimes it will start by pushing up just a little bit to the top side before it starts to push down, right? So let's say we push down, we get a break of structure, price pushes up. Once we get this break, this is where we are now eyeing or looking for the buy pattern to be complete. So this is the beginning of the buy pattern formation. Now, as the price is retracing, we are either going to retrace to that broken zone, which will now act as a support, and price will buy from there. That's the first scenario. The second scenario is price might go lower back to the equal lows and buy from there. We might actually have another liquidity sweep here, right? Like a pin bar or something. That can happen. Or price can retrace maybe into an order block. Or it can retrace into a fair value gap. These are all possibilities which we don't know until we see them happen. So if you are looking for a safe buy, that's where I will say you always want to wait for price to close back above the 13 EMA on M15. Right? So if we get a confluence there, we can take our buy. Then as the price is approaching the open price, That right there is a point of interest whereby we are anticipating a break and a potential retest again before we get another continuation up. This is this candle forming, and this is what you look for on the 15-minute. This is a higher time frame chart. So the only thing you're coming with as a trader is the understanding of the potential bias which you have on that higher time frame. So how do you understand, or how do you know, or how do you even start to figure out where your price is going? First, you pay attention to the 13 EMA. Is price far or is price close to the 13 EMA? That's what you check. You are now looking for nameable candles on or near the 13 EMA for an entry. So you want to see a pin bar, you want to see a doji, you want to see a bullish engulfing, or an inside bar on or near the 13 EMA. Usually after any of these four candles appear on the 13 EMA, the next thing after that is you are now getting expansion. That expansion is what we are trying to catch on this candle, and the one after that, and the one after that. Because usually if it's a trending market, it's going to push towards the same direction for at least 2-3 days, sometimes even more. So the main thing you want is to catch the trade while it's still fresh on or near the 13 EMA. Then once you confirm a bias, this is now the entry you are trying to catch, which brings us to the candlestick formation, which is what I explained here. So just based on what I've explained for now, do we have any questions? Maybe let me add something. These setups, this is usually Asian session. This is usually London session. This is usually New York session. So you just want to pick your session. Are you trading London or are you trading New York? Pick your trading times. Or are you trading Asian? Maybe some people go to work and stuff. You need to pick a session to trade. And when you see the pattern during your session, you simply execute the trade. I'm going to go into a live chart example just now, but based on what I've explained on candlestick formation, do we have any questions?
Sir, this candlestick here, I was knocked out when by a phone call, so I didn't get that side.
It's
If you
just the
don't mind
nameable
explaining.
candles. I was explaining the same things I explained yesterday. Like you want to get your nameable candles on or near the 13 EMA. So once you get the
Okay,
nameable candles, usually after the nameable candles, if you're in a buy motion, the next candle is usually big like this. So that's what we're trying to catch. And that's what brings us to this candlestick formation, which I was explaining here.
okay,
So
okay. No, then no problem, no question again.
So I'm going to ask because I'm going to ask again because this is the strategy we use. This pattern, each time I say pattern, buy pattern, that's the pattern I'm looking for, or that's the pattern we're looking for on our entry time frame especially. So do we have any question in terms of a buy pattern? Sell pattern is what I explained yesterday, but it's simply the opposite of this. So do we have any question? Because now when we open the charts, we need to be looking for the same thing. If you are not able to identify a pattern, it's either you still don't know how to identify one, or there is no buy pattern at all, which means there is no trade. One of the two. So is everything crystal clear in terms of candlestick formation?
Yes, in terms of candlestick formation, I'm clear, very clear
And
on
in
that
terms
because
of the pattern we are looking for?
then in terms of the pattern too, that thing has to do with waiting, whereby you have to wait for retracement and all the whole thing, but it's very clear from your explanation about it. It's very clear.
All right, cool. All right, so now we're going to go into a live chat example and see if everything we're explaining here, we can be able to see if we can be able to identify it. So
Okay.
before you join the session, I decided to just do analysis for the things I trade, but we are just going to jump to Euro USD, which is the main asset we look at for our lessons. So when we look at Euro USD right now on the daily, are we on the buy side or are we on the sell side?
Okay. You know you mute me before. We are on the buying trend.
We are on the buying side, right? We are on the
Buying
buy
side, yes.
side of the 13 EMA. So that's the first
Yes.
thing you want to identify. From the beginning of the month, what's been happening? So price has been pushing up. It's not much volume. So we are having like 1 day of a push up, 1 day retracement, 2 days up, 1 day retracement, 3 days up, but without volume to break any of the previous highs where we started. Right. So the first thing we identify is we are on the buy side. Second thing we identify is there is no volume.
There
So
is no
if there is
volume, yes.
no volume and you are used to getting, let's say, 50 to 100 pips on a move, if there is low volume or no volume, it now means when you take a trade, you should lower your expectations. If you're used to catching 50 pips on Euro USD, you should now aim for only 20, even 30, because there is low volume. But if there is volume in the markets, like here, there's a bit of volume. This is where you aim for the bigger moves or your normal pips. If there is low volume, you just aim for a small piece of the pie and you call it a day. All right. So today it's
Yes, sir. Sir. Hold on, sir. Just like today's trend now, when you see there, you can see a pin bar forming there, right? Hello,
that
can you hear
that's
me?
correct.
So when we now want to do, because normally if we sometimes this can what I have seen about the structure from my own thing, I'm still learning, is that after this small volume, after the Asian session that shows the a small volume, the London session is normally peak of the transactions of the business. So just like you said, if we aim for 20 or 30 pips, then what about if it passes that? Which is the strategy yourself, sir.
If you aim your setup for, let's say, a risk to reward of 1:2, and you
Yes.
take a buy and your trade reaches 1:2, and then you
Okay.
see for some reason this candle, let's say it continues being bullish for the whole day, would you
Yes.
say you've missed a trade when you've already won your setup?
Well, you wouldn't say that. You wouldn't say that.
Because remember, you are trading to make money, isn't it? But
Yes,
you don't
yes.
want to chase price. We don't chase price. It's part of our rules. We don't chase
Okay.
price. Remember, even if the move was big like this, what you're trying to catch is a piece of the pie, just a
Okay.
piece of the pie in line with your trading plan. If your plan is saying on a low volume day, go for less pips, and that day decides you go for 20 pips and you take the 20 pips, and that day the decides to go for 200 pips, would you blame yourself for following your plan?
No, 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 you
You
won't.
wouldn't blame yourself because your plan it's been tried and tested. The reason we formulate our rules or we come up with a plan or a system is because we have back tested more times. We've back tested many times to see that on average, if it's a low volume day, it's pointless to have a target of 50 pips or 100 pips when you can visibly see that it's low volume. So if you aim for 50 pips and price decides to do what it's doing and continue with the low volume and it gets to the 20 pips but then retraces to your entry point and you've missed on this 20 pips because you want to force the hand of the market, or you want to force the market to give you more volume when it's clearly showing you that the volume which is there this month is not really that much. We cannot say we have a trend even because we don't have any higher highs or higher lows. So that's a clear sign that we've got no or low volume in the market. So the main thing I'll just emphasize to quickly answer you there is have a trading plan and also try to look at one thing because you can only see the things I'm mentioning if you are trading one thing and focusing on it. You can easily see that this week maybe Euro USD has been choppy, or this week Euro USD has been trending up or trending down, or whatever the case. Unlike when you're trading 10 things and your mind is all over the place, it's hard to pinpoint what your actual asset is actually doing. So that's why people now end up chasing price, because you come to the charts and you see one big M15 candle, for example, then you want to buy into that candle, not knowing that on H1 is actually a pin bar which is being formed for a sell. So you buy here chasing price, whereas price wants to do something else. So it's all about formulating a plan, and based on different market conditions, you know what to bring to the table. If you open, for example, let's say you open your charts and you are looking for a liquidity sweep, and that day there's no liquidity sweep, it does not mean you cannot trade. There might be other confluences like maybe an order block retest, which is a clean entry, which you can also use. There might be a break and a retest of something. So you always need to have your rules formulated that if I see this, I do this. If I see this, I do this. That's how you should formulate your rules. So coming back to my explanation. So since we've got low volume, we are aiming for 20, 30 pips, just small moves. So starting from yesterday, if you came to your charts yesterday, if you looked at the daily, you would have realized that price was here. This was Monday. And when we woke up with price trickling down back to the 13. So if you are looking at price, you're looking at it this way. You are saying, okay, if my price gets to the 13 and we come below it, then most likely price might want to push lower. If we come to the 13 and we respect it, price might most likely push higher. These are the things you are saying to yourself as you are looking at the charts. So let's see by the time we wake up in the morning where the price was, so that we can formulate like what was on our mind. So coming to the H1 and looking at price, you would have noticed that when you came to the charts, price would have been here. This is just before London Open. I'm not tracking candle for candle for candle for candle. I'm only coming to my charts just before my London Open if I'm trading London session. What are my confluences? The first thing I realize is price is pushing down towards the low of my psychological level, which means if I get this, I can sell. I'm already having a plan. If I get this, I'm going to sell. What else do I have? I also have the previous day's high and I've got the previous day's low. So now if I break again the previous day's low and retest, that's another confluence whereby I have a psychological level and I've got the previous day's low on the same area. So if definitely we get a break and a retest, then I'm going to do what? I'm going to sell. But if price takes out liquidity like what you see it did, then what am I going to do now? I'm going to look for a potential buy. Where am I buying to? I'm buying back towards the previous high I see. I'm buying back towards the day's open price. I'm buying back towards the previous day's high. So now I have points of interest. And remember, this is the H1 chart. So all these things, you are having these thoughts whilst the candlestick is still forming, right? So price pushes aggressively down. At some point, this candle was solid black or solid bearish at some point. Remember candlestick formation. And that was the lowest price. So if you were going to sell, you were looking for price to retrace and now give you a pin bar based on yesterday's sell formation or sell setups, then you look for sells. But if price does not give you this, you have no reason selling. Rather, look for possibilities of a setup to the other side, depending with what price is showing you. So after the close of this H1, you'll be like, okay, price has taken out the previous day's low. Price has come back into the psychological level range. I think we potentially almost took out Monday's lows, but I don't think we did. So now I'm looking for a potential buy. If I'm buying, what do I want to see on H1? I want to see price being above 13 EMA. That now confirms the buy. Where is the buy coming from? From this liquidity sweep, from price now having tapped into the 13 EMA on the daily, it's already tapped the 13 EMA. So once I come above, I have confirmed that I am bullish, or we have confirmed that price is bullish. Now we can actively look for an entry. At that point, you can look for an entry. So all these setups I'm explaining, these are called safe buys or safe entry. Each time I mention a close above 13 EMA, that's a safe buy, safe buy. It does not mean that you cannot enter here. You can still enter here if you know what you are looking for, or if you were anticipating the liquidity sweep and the push up, then you can still have what we call early entries, as long as you know what you're doing. But if you don't understand that, if you're scared of the early entries, then go for the safe entries, because here you never go wrong. You're simply waiting for clean confirmations of bias and your entries. So I'm going to look at both ways. So the first thing is, soon as my H1 closes, notice I'm not putting a vertical line like this here, because when I go to a smaller time frame, this time or this candle might confuse me. I need the exact time where this candle is closed. So if you put a vertical line, or if you put a horizontal line, let me show you what it looks like now on M15. So before we go to M15, what are we looking for on M15 for us to buy? We are looking for the pattern. We need to identify the lowest low. We need to identify a break of structure. We need to identify this potential pullback, because that's where now we want to take our buy entry. So if you can get it on M15, perfect. If you can get it on M5, perfect. If you can get it on M30, perfect. If you can get it on the 3 minute, perfect. If you can even get it on the 1 minute, it's perfect. You simply need to follow the bias which your higher time frame is showing. All right, so now we jump to M15. M15 is the chart I normally use to confirm my pattern. So when I come to M15, what do I have? Okay, I'm on the wrong day, wrong day, wrong day. I was looking at today. All right, so when I come to M15, what do I have? Right, on M15, this red line is what I'm mainly focus on, because now I know here my H1 is closed. That's where it closed, and we put that red line. This might confuse you. Maybe if we go to smaller time frames, this vertical line, because sometimes it will paint here, sometimes it will paint here. So it will confuse you. That's why we don't use the vertical line, or that's why I don't encourage you to use it. Right. Okay, so after we mark where my H1 is closed, what makes this pattern a valid pattern? What do we want to see? There has to be a break of structure somehow. To our left, there has to be a break of structure. We need to understand the story being narrated here. So first things first is, this is the previous day's low, which was also Asian session lows. It's only being visible now. Soon as I get this close above, for early buyers, you can start buying here. This is for early buyers. For those who want to wait for confirmations. The first early buy, which was presented on M15, was this close above the 13. But at this time, H1 was not yet above the 13. So these are the things now you need to take into account. You can wait for the H1 to close, but when the H1 closes, price will be here. There is nothing wrong with looking for setups here, but if you understand the narration of what's happening with price from your left, you can also start entering here. You can also start entering anywhere in here. Why? Because price is now above the 13, and anytime you get a close above the 13 in line with the higher time frame bias, that now shows you that your trade is safe. But a safer stop loss now before the H1 closes is always below the last low. Last low, you see the last low of the day, that's where your stop loss goes if your entry is going to be anywhere in this place. But now, if you're using the H1 safe entry after H1 is closed, you come to M15. M15 gives you a doji above the 13 EMA, on or near the 13 EMA. Soon as you get that doji, if you come to the 3 minute, you will be able to get a very nice entry here. So if you go to the 3 minute, which is my entry time frame, okay, on the 3 minutes, what are we looking for? Oh, I believe this is yesterday's price action. What am I looking for? Remember this red line, that's after the H1 is closed. Price pushed up, retraced a bit, and we had this push down here. So take note, I'm not taking or using these entries. Do you know why we are not using these dojis you see here? Because that's the doji on M15. M15 was pushing up. The doji retraces back into the 13, which is the reason why I say do not overlook the M15 or M30 by jumping from H1 straight to M3, because M3 might give you signs to enter a little bit too early, whereas price still wants to retrace on the M15 or M30. So now after this doji has been formed, we can literally enter on the first close above the 13. First close above the 13, you can enter. The first nameable candle you see, which allows you to enter, you can enter because everything has now been confirmed. If you look at your TDI, M3, TDI, at this point, we are now above the 50 static. That's also confirming a bullish trend on that particular time frame. Once you confirm the TDI above the 50, what do you look for? You are looking to buy any retracements and touches on the 13 EMA. This is a bit advanced whereby you're now adding, but your best entry should happen right here. Safest entry after H1 is closed. Now, if you look slightly to the left where the trend started, this was our point of interest. I think the previous day's low is somewhere here. So soon as you get a close above, do you notice now that we've got a lowest low? We've got a break of market structure. We've got a retracement into the 13 EMA and into this order block, or that same structure which has been broken. So break and retest. Once you can confirm a buy pattern, this is what we look for. If you can identify this on M15, it's perfect. If you can identify this on the 5 minute, perfect. If you can identify it on the H1, it's even perfect, because the higher the time frame, the stronger the setup, and the longer the price will move in your direction. Meaning, if you can see this pattern form on H1 and you get this on H1, let's say it's a pin bar, and you are now able to drill to the 3 minute and get an entry here, this will now mean instead of having a 1:3, you might close your trade here or take your profits. If you leave one runner, that runner might end up giving you a 1:10. because the pattern was on a higher time frame. But the main thing I'll say is don't worry about catching big trades. Focus on identifying the pattern and taking a piece of the cake. Once you get your piece of the cake, you are done, even if price is going to move 100 more pips up. So same applies today. We had the same pattern, which formed, we identify a trend, we identify the lowest low, we identify a break of structure. It could be this one, it could be this one, which broke all structures to the left. So you could have entered anywhere from here, 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 targeting today's open price. You get it? So it's all about patience, all about patience, understanding candlestick formation. There's about 2 minutes left in this session. I don't think I'll do a part two because I've delivered a lot of information now. So you just have to rewatch this back test if you can. You can look at another pair, maybe look at two pairs, Euro USD maybe, and something else, or whatever you trade on your side. Try to identify the trend on the daily. Once you identify what's going on, drill down 4 hour, check your psychological level if you use psychological levels. You can also trade without even looking at the 4 hour, but H1 has to be your best time frame. So there's about a minute left in this session. I don't know if you've got any questions.
No, 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 no. There's a lot of information I have to. No problem.
Okay, so
No
for
problem.
now, I'm going to allow you to watch this on Telegram. So what we're going to do tomorrow, we're going to do a back test based on where price is left, where we are leaving price right now. So we're leaving price, we are in the London session. By the time we come tomorrow, all this price is going to be filled. So we're just going to see how we could have traded this during the New York session. So if you are able to take a trade on this on your demo, please do take the trade New York session if there is a setup. And then we
I will do
discuss
that.
it. We discuss it
I'll do that.
tomorrow.
Okay, sir.
Okay, all right. Thank you so much for joining. We are going to have a live trading session today, 4 p.m. GMT +2. You can also join.
Okay, okay.
Okay, all right. Thank you so much for your time. Enjoy your day.
Yeah.